Hey guys, what is going on? Welcome back to my Robinhood portfolio. Hope you guys have had an awesome weekend. What I thought I would do today is talk about special dividends, especially special dividends in context of the dividend capture investment strategy. So I thought I would just kind of review quickly what a dividend is, what a special dividend is, and then how that can be used within the dividend capture investment strategy. So a dividend, as you guys remember, is simply a distribution of a company's earnings, at least a proportion of the company's earnings, decided by the board of directors, which can be issued in the form of cash, also in the form of additional shares of a company and or other property and assets. Within Robinhood, this essentially is cash payments. And these dividends typically occur on a quarterly basis. Some of the business development companies, closed-end funds, will do this on a monthly basis, but for the most part, these are given quarterly. A special dividend is essentially the same thing, only it's non-reoccurring distribution of a company's assets, usually in the form of cash, but it can also be additional shares of a company and or other property and assets. The thing about the dividend that makes it special, it's typically much larger than the normal dividend payout by the company. Also referred to as an extra dividend, if you will. And these dividends are based on a number of different things. Typically, it's because the company had very strong earnings in a particular quarter. They give this back to the shareholders in the form of this special dividend. But it can also be because of judgments the company has won for a number of various reasons, and the company gets a large cash payment, and or the company basically wishes to change its direction, financial structure. It may want to spin off a company, or it may want to take on extra debt and or have a completely different philosophy moving forward. So to do that, they issue a special dividend to shareholders. As you can see here, this stock, AmeriSafe, was suggested by a viewer. It actually has a special dividend coming up on the 13th, so its ex-dividend date is on the 13th. And as you guys remember, if you want to get the dividend, you basically have to hold this a day prior to the ex-dividend date and then hold it through that morning of the trading session for the ex-dividend date. So for this stock, the ex-dividend date is on the 13th. The payment date is on the 29th with the record date of the 15th. So if you get this dividend, you'd essentially want to hold this on the 12th, which is on Monday. If you hold it the 12th, and then you can sell it off on the 13th and get that special dividend, which I think for this stock, if I remember correctly, is $3.43, which is almost 6% of the stock, as it is priced here at $65.50. So the whole idea behind dividend capture, as you guys remember, is buying the stock a couple days before the ex-dividend date, holding it through that date, and then selling on or after that ex-dividend date. You'd be qualified for the dividend, but then you can get rid of the stock, get that capital, and then buy another stock that has a similar dividend coming out, another either quarterly or monthly dividend and or special dividend. So just kind of a way of doing the dividend capture, only much larger with regards to the dividends. It's a little bit more complicated than that because, as you guys remember, anytime a company gives out a dividend, whether it's special or regular, the stock price typically should drop by that amount, by the amount of the dividend. That doesn't always happen. Because of that, that's what makes this dividend capture strategy viable. Either the stock stays at the same price, so you get that dividend in and out with no loss of capital, and or it only drops a fraction or a proportion of the dividend price, so you can get in, buy the stock, get the ex-dividend date held through, sell off the stock, get the dividend, and then also not have to sell the stock off for less than what the dividend was. If that makes sense. I kind of went through that pretty quickly, but you can go back over a prior video. I went into pretty good detail about what a dividend capture strategy is. So getting back to AMSF, so this stock has an ex-dividend date on the 13th. It's cash payment of about 6% of the overall price of the stock, $3.40. So the idea would be to buy this tomorrow, hold it through the 13th, and then sell off. So very cool way of maximizing the return on the dividend capture strategy. Another unique stock, which I think is even more compelling, is this Pharmathene stock here, PIP. So this stock actually has a dividend at one point which would be greater than 100% the value of the stock. So looking back over the last month here, so this stock has, I think, an ex-dividend date coming up in February. I think the ex-dividend date is the 6th of February. If I remember correctly. I'll have to actually go back and check the particular dates. But anyway, this is coming up in February. So at one point, the stock was trading 280, 290s range, and the dividend payment on the stock is actually $2.91. So at one point, if you had held this even a month ago, it would be greater than 100% of the value of the stock here. So if you would have held it here or bought in at 285, the stock is going to be paying out $2.91. So this is a very, very cool way of utilizing the dividend strategy for making gains. So I'm not exactly sure what's going to be happening with this stock after that February ex-dividend date here. Oh, here we go. You can see in the recent news for this stock here, Pharmathene declares $2.91 special cash dividend. Looks like this is going to be payable on December 5th here. So very, very cool strategy here. Otherwise, you can see here there's no dividend with this particular stock. So this stock doesn't have a quarterly or monthly dividend. It just has this one special time dividend payment. So I'm not exactly sure what's going to be happening with the stock after that. So as you guys remember, as I just said, the stock should fall by the amount of the dividend. So if you guys were to buy into the stock now at $3.20, the stock should fall by $2.90. So the stock should be basically worth nothing after the dividend payment. But if this stock were to stay at about the same price, it's kind of a cool way of getting a dividend, getting in and out. So I don't think I'm going to be doing this. I think it's too risky for this particular stock. I consider this a penny stock. But yeah, let me know what you guys think of this particular strategy. And you can see here this stock has risen over its 5-year kind of trailing average here. But again, I would consider this a very, very risky play, a penny stock, if you will. So yeah, very cool stock here. Almost 100% of its value given out in a special dividend. And then another stock, Buckle here, also has a special dividend coming up. I think this one is in March or so. Actually, no, this is going to be happening in January as well. Looks like an ex-dividend date around the 11th or so of January, $1, representing about a 4-fold increase from its typical quarterly dividend of 25 cents. So another stock that can be utilized in the dividend capture strategy. So 3 stocks here, BKE, PIP, and AMSF, 3 stocks that can be utilized in the dividend capture strategy by capturing their special dividends. And again, of note, this AMSF has an ex-dividend date coming up in just 2 days. So if you were thinking about using this in the dividend capture strategy, tomorrow will be the last day to purchase that stock and then being able to qualify for that dividend payment. So yeah, let me know what you guys think about this strategy of capturing special dividends within the context of the dividend capture strategy. Much more risky, I think, than capturing, a quarterly dividend or a monthly dividend. The special dividends, are one-time payments. The stock price should move quite dramatically after those dividends are given out, or at least through that ex-dividend date. But yeah, very, very cool way of doing the dividend capture strategy. So let me guys know what you guys think. If anybody is going to be taking part of these 3 dividends, especially this PIP here. This is really, really interesting. At one point 100% of the share price. Now it's still, I think, around 90+% of the share price. So very, very interesting to see what happens with this stock. And then also AMSF here, a very good 6% dividend, 5 to 6% dividend coming up on Tuesday. I may jump in just for fun, buy a couple shares of the stock to see what happens. But yeah, let me know what you guys think about these particular plays. As always, if you guys enjoy my videos, feel free to share, like, and subscribe if you're so inclined. Building the channel, having a ton of fun learning about the markets and putting out these videos. So if you guys have an idea for a video, let me know. And yeah, until then, I'll see you guys tomorrow.